Hi, my name is Larry Walters. This video is produced as part of the Leveraging Land-Based Finance for Local Governments produced by Global Land Tool Network and UN Habitat. You should by now have seen part 1 and had the discussions related to that. In this particular session, we're going to be talking about the administrative aspects of the land and property tax. This is part 2. Part 1 talked about the policy issues that need to be addressed when you're designing or implementing or reforming a land and property tax. This session will focus on the administrative issues. So we'll talk about the administrative practices, because what we're going to see is that whatever the policies may be, how they actually get administered has a huge impact on how effective the policy is, how fair it is, how successful it is at generating revenue for local needs. So our objectives are twofold. First, we want to familiarize participants with the importance of administrative practices as they impact the revenue productivity of the annual tax on immovable property. Second, we want to help participants understand and articulate the key tasks that must be performed in order to design or reform the administration of an annual tax on immovable property. To see this, I want to introduce what I call the revenue equation. This is the recognition that the revenue from the annual tax on land and property has two significant factors. There are some policy variables and there are some administrative factors. There are two policy variables that have to do with how the base is defined and how the rate is set. Normally when we think about taxes, we think about, okay, base times rate equals revenue. You know, this is how much you owe, send it in, we're all good. In the case of the annual tax on land and property, however, there are three other administrative factors that turn out to be extremely important. The first is what we call the coverage. That's the proportion of all the land that should legally appear on the tax rolls that actually does appear on the tax rolls of the fiscal cadastre. The second administrative factor is valuation. What proportion of the taxable value that's identified in law is actually identified in practice? And the third issue is the proportion of the tax that is levied that is actually collected, because we often see collections are not 100%. So you have coverage, you have valuation, you have collection, and you can see on the bottom of this slide the revenue equation, that the amount of revenue that you get is based upon the base times the rate times the percentage of properties that should be on the roll that actually are, times the percentage of value that should be there that actually is, times the percentage of value that is collected compared to how much it should be collected. To see how this, let me give you an example to show you how this works. Suppose the tax base is defined as market value and the legal rate is 1%, but only 70% of the properties that should be on the tax rolls have actually been identified and registered. And the valuations are pretty good, but they're out of date. And they reflect only 80% of the actual market value. And then we send out the bills, but we're only successful in collecting 80% of the tax that is actually billed. Now, by international standards in developing countries, those numbers look pretty good. But look what happens. Under these conditions, the revenue collected will be less than 45% of what should be collected. 0.7 times 0.8 times 0.8 is 0.448, less than 45% of what should be collected. The implication of that is it's very often possible to increase the revenue by improving administration without changing the tax law or raising the tax rates. Very often the case. So let's talk coverage first. There are fiscal cadastres, there are legal cadastres. The legal cadastre has all of the properties that have a clear title. All the legal issues have been resolved and there's no question about, or there may be few questions, but there can be adjudicated in the courts as to who owns what. In many cases, that legal cadastre is a very small proportion of the total property. It may be that getting your property registered is a relatively expensive process. You have to have a surveyor, you have to have an attorney, you may have to have a notary involved, all of which can be expensive for landowners. And unless they're going to use their title in some way, they really don't feel any need. Everybody in the neighborhood knows that it's their property, so why go to the process of getting it legally registered? So they don't. Well, if you're using the legal cadastre to generate the tax obligations, you're going to miss the property that isn't registered. So we generate what's known as a fiscal cadastre. This is a list of all the properties. We don't care who owns it. We don't care about resolving all of the legal disputes. What we're interested in are the physical dimensions of the property, its location. We need to know who the occupant is, but we can find that out by knocking on the door and asking. We need to know something about, perhaps something about its physical condition, what kinds of construction materials there are, but we don't need to resolve all of the legal disputes over who owns what. It can be an approximation, and there can be a process for moving from the fiscal cadastre to the legal cadastre over time. This implies that there are surveys and inventories. We can start with aerial imagery. We start by going door to door. In the pictures that are on this slide, I'm showing you what was done by UN Habitat in Afghanistan to actually go out and survey the properties, to work with the local communities, and identify and develop this fiscal cadastre on the properties. That's how we begin to improve the coverage. And this takes time, but it doesn't take a huge amount of time. Resolving legal and finalizing the legal cadastre can take, and often has taken, decades. The fiscal cadastre can be produced in weeks or months at a much lower cost. Right? There are examples in Somalia and elsewhere where it has been done for very low cost and very quickly. Okay? So we get this inventory and put our fiscal cadastre together, recognizing it's not the same as the legal cadastre. Because you're in the fiscal cadastre doesn't mean that you own the property, it means that you occupy and benefit from it. Valuation. We have to set the valuation standard. Here we have to pay attention to the maturity of those real estate markets. We have to think about how often we're going to revalue. And I would suggest that we want to do it at least every 5 years, maybe every 3 years, because especially if the real estate markets are fairly dynamic, if in rapidly urbanizing areas you're going to have to work hard to keep those values up to date. We also have to think about the skills that are required and the number of valuation staff we have. Market value is often referred to as the gold standard in land and property taxation. In my mind, it's not. It's a complex, difficult system to maintain. It takes a huge amount of information and expertise. It's quite possible to maintain a very effective system with less skilled valuation staff if you focus on the attributes of the property. And the other question is, where do you get the data? Where's it going to come from? If you're using a market value standard, you have to know what's happening in the real estate market. That information is often closely held by real estate professionals, and they may or may not be willing to share, even if you pay a fee. The other final point on this is, don't rule out self-assessment. That's a great way to jumpstart a system, is you actually ask people to fill out the form and say, okay, how big is your property? Where is it located? What construction materials are you using? Let them determine or define and present to you what the information is. Now, you may not get 100% participation, but every form that gets filled out is one that your staff doesn't have to go out and survey. You do need to have an audit function, so that people need to understand that what they report will be checked, and if they're deliberately falsifying information, there may be penalties. But self-assessment has been a great way to jumpstart systems, and to even systems that were already in place have been enhanced through a self-assessment process. Then there's collection. First point of collection is billing. The bills must be regularly generated and reliably delivered. Someone has to calculate the tax obligation that's due, has to actually generate the bill, and then it has to be delivered. If the mail system doesn't work reliably, you have to find some other way to deliver it. That may be through the use of the electric department or the water department or one of the other utilities that has better information on how to get to these people. It may require door-to-door delivery. In some instances, the notices are simply posted publicly in a public place, and people can see what their tax obligation is. But the point is, if you expect people to pay, they have to be informed what the obligation is. Next point is the inquiries and the appeals. Once they've got the bill, people may say, well, wait a minute, this isn't right. I don't deserve to pay taxes at this level. There's an error in my data. There's an error. I think they've got the value wrong. There needs to be a process for people to easily make inquiries about how the tax was calculated, and if they think they've been treated inappropriately, to appeal. Particularly in a new system, that's going to require a fair amount of human resources to field those inquiries and to process those appeals. The appeals should be resolved as quickly as possible so that people understand and can make appropriate plans, and so the governments know what kind of revenue should be available to them. To the extent possible, those appeals and inquiries should be resolved locally. Should at least be received locally so that people don't have to travel vast distances in order to be able to do it. Third point is collection. The evidence is clear. The easier you make it for people to pay their taxes, the more likely they are to do so. Whether that be by telephone or at the local bank or at a local shop or a utility company of some sort, the easier it is for people to pay those bills, the more likely they are to do so. If they have to get on a bus and go 3 hours across town to pay the bill, much less likely to do it. The other point related to collection is that people need to understand the connection between what they pay and the benefits they receive in their neighborhood. If people can see the connection visibly in better roads, better street lighting, cleaner streets, between what they pay and and the conditions in their neighborhood, much more likely to pay. All too often, people pay their money and then it evaporates and they have no idea where it goes or what benefits they're going to receive from it. In those circumstances, compliance rates are much lower. Finally, there's the issue of enforcement and sanctions. Some people will attempt to avoid paying the tax. So there needs to be in place some sanctions available to administrators to use to pursue people who are tax avoiders. Okay? And the cost of avoiding taxes should be certain and it should be noticeable. Okay? We're not talking about small penalties. We're talking about making it painful not to pay your taxes. At the same time, I recognize that in many instances, there's a law on the books that says, well, if you don't pay your taxes for 3 years or 5 years, the government can seize your property and sell it at auction. That provision exists in many laws. It's rarely used, very rarely used, because it's politically very difficult to take someone's property, especially if you're in an environment that says, no, land and property are essential for the achievement of human rights. It's not just an economic commodity, it's essential for human rights. You're not going to take their land through that kind of a process. So what do you do? What kind of sanctions should there be? One option is to have what's known as a national taxpayer identification number, where the people who own this property are identified by the same number that we use to identify their income taxes, their bank accounts, their automobiles, so that if we won't get their property, their land and property necessarily, but we'll go after other assets that they may have. There are ways that we can address these issues, but the point is we have to think carefully about the enforcement and the sanctions, and we have to make sure that we're actively pursuing those tax avoiders. Okay? So what about revenue impact? Is it really worth the effort to do this? Well, if you look at the average among OECD countries, they get about 1% of GDP. There are some countries, about 7 countries, it's over 2% of GDP. If you I looked at 31 non-OECD countries, the average was around 0.4%. Now the annual land and property tax can yield then between 2 and 3% of GDP. But a more realistic target for most developing countries is about 1% of GDP. If you can get to that point, you will have a system that's really very effective by international standards. Okay? The incentives for private investment will depend heavily on how the tax is designed and implemented. Taxes on land encourage investment, encourage improvements to the land. Taxes on improvements discourage investment. That's why I advocate thinking about splitting the tax and separating it into a tax on land and a tax on buildings so that we can treat them differently because they create different incentives for private investment. The other thing to recognize about the land and property tax is that it may increase the cost of housing. Taxes on land will likely increase the availability of land and could in fact lower the overall cost of housing, depending again on how we design and implement these taxes. In terms of spatial and planning implications, the evidence is that the recurring land taxes reduce sprawl and encourage more efficient land use. You think about it. If I have a large parcel of land and it doesn't cost me anything to have an even larger parcel, there's no reason not to. But if each additional hectare of land or costs more because of the taxes that I have to pay on it, I'm going to be a little more cautious and a little more conservative in the amount of land that I use. I'm going to use what I need, but I'm not going to use more than what I need. The key tasks in recurring land and property tax administration can be summarized this way. You have to generate stakeholder support from the public and other stakeholders. If people don't understand what they're getting for the money, if they don't understand the need for this tax, there will be resistance. So a public process to engage with the public in and educate the public on why and how it's going to work and what we're going to do with the money, it's very important. We have to adopt, revise, update the enabling law. We have to regularly update the land and property values. Again, my suggestion is every 5 years, certainly 3 years in a really dynamic market. There are some jurisdictions in the world that do it every year, but they have more resources devoted to that than most jurisdictions can afford. We have to systematically review land use to identify changes in use or density. If we have a piece of a property that somehow got subdivided informally into now there are more properties, more homes or buildings built on there, we need to identify that. We need to update the records. Whether or not it's legal, it should still be taxable. We need to reliably generate and deliver those tax notices to the landholders. We need to respond appropriately to the inquiries and appeals from taxpayers. We need to consistently collect the tax and vigorously pursue tax avoiders. And then we need to allocate and spend the tax revenue in ways that are publicly visible, meaningful, and benefit those who pay the tax. This is particularly true in informal settlements. The evidence is that if you put a tax on the land of an informal settlement, they will be some of the first people to come forward and pay the tax, especially if there's then a mechanism for them to move from taxpayer to landowner. But showing that they have a claim on that land because they pay the taxes, and if you can then invest the money back into that informal community in terms of improved infrastructure and services, the evidence is that they pay the tax, if it's within reason, of course. So there are 4 cases in the training package related to the land and property tax: Punjab, Pakistan; Bogota, Colombia; Kandahar, Afghanistan; and tax reform in Sierra Leone. All of them are interesting. They all have different aspects. I'm not sure which two your team leaders or your facilitators have selected, so I'm not going to say much more about them other than to say that if you haven't read them, you should. They're pretty interesting. But enjoy your cases and the discussion, and thank you very much.